Talking to the results for Huge Group for the 6 months ended 31st of August 2012, we believe it's a fair reflection of the trading period for that 6 months. We're pleased with the results, and I think talking to investors, one always needs to focus on a number of key issues. The first I believe we'd have to talk to is the revenue line. At the revenue line, we've seen a reduction in revenue over the comparable period, the previous or the comparable 6 months to 31st of August 2011 by around 26%, and I'll come back to that in a minute. At a margin level, we've certainly seen an improvement in margins, and we've seen an improvement around about the 12% level. And that's probably the most important thing that we can identify in terms of our performance. And then I think in terms of looking at cash generation, the business is cash generative, and that's important to us as we continue to strengthen the balance sheet of the company. Talking specifically to the revenue line, we made a specific decision earlier in the year to continue to accept the losses of larger, thin margin business, where we decided not to fight on price. We are focused on the mid and low end of the market, where margins are richer, and that's given rise to the improvement in our margins, and is a reason for the decrease in revenues. As I said, the business is cash generative, and we've been using the cash flows that have been generated to continue to strengthen the working capital in the business. I think looking at Huge, one has got to look at it over the longer term. I think in a comparison of year on year is difficult. I think one needs to reflect back over the last 2 or 3 years. The business has certainly been through some very difficult times, and I believe that it's stabilized. But certainly the losses of the connection incentive bonuses that we suffered during the 2011 year, that was the year to February 2011, and some of the larger client losses that we suffered during the 2012 year, the year to February 2012, left the business in a position we probably have to describe as having a weak balance sheet. The impact of the improvement in terms of our earnings and the cash generation we are using to improve and to strengthen the balance sheet, as I said. It would also be worth noting that we have managed to further contain our overhead costs. We reduced those on a like basis against the previous 6 months by around about 12%, and that's without impacting on the structure and the efficiencies in the business. So we've worked hard at improving both our financial performance and our financial position.